Stockwatch is brought to you by Merchant Waste. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant Waste. Finance, invest, insure.
You're watching Stockwatch with me, Simon Brown, and joining me to unpack your stock-related questions today, Alex Duys, Umthombo Wealth, Devin, Shutte from the Robert Group. Be sure to send questions via email stockwatch@bdtv.co.za, SMS 41392, or on Twitter @BusinessDayTV, #Stockwatch. Gents, appreciate the time. Devin, let's start with you. Let's go back to Friday. President Trump threatening an additional 100% tariff on China over rare earths. Although it does, it rattled markets markedly. In fact, worst day on the Nasdaq since, well, the last time we had tariffs back in April. It does seem to have walked back a whole bunch. Trump saying, no, Xi's just an old man. China saying there's T's and C's, you can still have some. This does seem to be more just saber rattling and spooking markets, but futures again today looking green.
Yeah, look, I mean, this is exactly what markets were afraid of, is that we get some unforeseen, well, let's hope it's saber rattling, but, maybe more complications in terms of trade policy, tariffs and all of that. We've had such a strong run since Liberation Day in April. I think it was almost kind of a nightmare to see those potentially re-emerge. But yeah, I think saber rattling is spot on. It does remain consistent with Fridays really being poor days in the market this year. I don't know the exact dates, but Liberation Days, we had some heavy sell-offs in the last day of the week, and Friday was definitely no exception. So I'm really happy to see green on the screens. It seems like the taco trade is still well in play. Trump's walked back some of those original threats, but yeah, I think it also just goes to show how complicated kind of global trade has become at the moment, and how it evolves around these almost larger than life personalities, and us in the markets really have to try and kind of decipher that. And what do you get? Volatility. Yeah,
you get volatility. Alex, it is a sense of it. I was frankly a little bit surprised by the response on Friday, but this is the new normal we have. Tweets and truths and all the other things are driving insane volatility in our markets. And as investors, I suppose the best thing we do is, stick to our guns and find the value.
Yes, correct. And remind again just to strap yourself in, because this is going to happen for the next 3 years as well. So it's not going to change. We've seen how the market reacts to this. So I think the memories are still short. As a result, business is a bit more scared. But yeah, we're going to see this type of volatility and rhetoric for years to come, unfortunately. Yeah,
it's over 1,000 days of the Trump presidency still to go. So it's not going anywhere soon. Alex, stay with you. Boxer results out this morning. Good numbers. The HEPS, not so much. And of course, that's because of new shares and IPO and the like. Your take, now that we have seen the market like the update, the results came through this morning, looking strong. Your thoughts on the Boxer results this morning?
I think it's a very good set of results, and it's clear that they've got very strong momentum at the moment. So the results are still a bit messy because of the once-off costs of the listing, as well as the dilution of shares. So investors need to look through that. But I think momentum is looking good, considering how poor inflation is in their basket. It shows you the very strong volume growth and like-for-like growth they're able to generate. And they've also now starting to roll out stores more aggressively. One thing we like about Boxer is that the cash earnings of the business is very, very strong. Yes, some of that will reverse in the second half, but cash earnings is substantially more than call it normal accounting earnings. And I think that enables them to reintroduce the dividend, to fund the capex, et cetera, et cetera. So I think that puts them in a very good position, in our view, over the medium to long term.
Yeah, and certainly, stock trading at all-time highs. Only up a little bit today, but it's really hard off that trading update. Devin, for you, the Boxer update, the Boxer results, it is trading up at the highs. Market is liking the new retail listing. Your thoughts on the numbers?
Yeah, momentum's exactly right. They pretty much haven't put a foot wrong since listing. It was honestly a Hail Mary from Pick and Pay that's worked out pretty well for all involved. As Alex said, really strongly cash generative, gone into a net cash position from a debt position a while back. nice divvy there. And I think what I like out of the results is they've managed to defend some pretty nice margins in this kind of wholesale space, over 4%, which, take ShopRite out of it, compares pretty favorably to the other retailers in the space. So quality counter and I guess unsurprising at all-time highs.
Yeah, that 4.1% margin, I agree with you, absolutely stood out for me. So Devin, where do you sit on the buy Boxer or buy Pick and Pay for Boxer debate? I mean, everyone has a different view. Let's get yours.
Yeah, I mean, last time I ran the numbers, you were pretty much getting, if you're buying Pick and Pay on a look-through basis, you were getting the Boxer stake and then the rest of the Pick and Pay operations for free. I think it's still pretty much in play that. It does look like there's some signs of life from Pick and Pay. I think they are doing the right things, but make no mistake, it's going to be a long, hard grind to get them back. I quite like it. It's quite aggressive, but I think there is the opportunity now to do that. But yeah, if you're a purist, there's nothing wrong with just going purely into Boxer. So yeah, both have merits for me, Simon.
Alex, where do you sit in the Pick and Pay or Boxer debate?
I think that depends what type of investor you are. So if you want someone just to buy and hold, then Boxer is obviously the better position to do. If you're going to be more active and keep monitoring the situation at Pick and Pay, then that's something to consider. Execution risk within Pick and Pay corporate and a franchise division is still very, very high.
Yeah.
So something can go wrong there, which then takes away your gains you make from Boxer. But at the same time, you're getting at quite an attractive valuation. And if there is expansion in margins or surprise at the top side, then you can make more money with Pick and Pay. But I would say for the average investor that just wants to buy and hold, Boxer is probably the better bet, unless you want to be very active.
Yeah, no, that's a great point in that regard. Alex, let's stay with you. The Harmony acquisition of the Australian copper deal became effective on Friday. Your thoughts? I mean, we've got Sibanye, which of course is gold in PGM, but most of our gold miners on the JSE have traditionally been gold miners, and you just got gold. Do you like the idea of sort of adding copper to the gold mix? It'll perhaps reduce some volatility, but also perhaps reduce some upside, because copper is not quite as flying as gold at the moment.
Yeah, I mean, the less complexity, probably the better for most investors. If you want to buy a gold company, you want to buy pure gold exposure. You don't want other assets that could perhaps take away the interest. Obviously, if we as investors are interested in copper, we can look at options like that. I mean, we know the Anglo Tech is going to be over 7% exposure to copper. You're going to probably want to play that, for example, then looking to get copper via Harmony. So my preference remains for single commodities where you can, and less risk on capital allocation. Rather pay me the dividends back, and I can reinvest that money where I want it to be.
Yeah, I think that's where I sit on the fence. Devin, your blending of precious metals, or industrial and precious?
Simon, look, I mean, I think if you get the timing right on these single commodity producers, as any investor who's been there this last year will tell you, there's no better place to be, and you feel like a rock star. I guess the challenge comes in when it's those prior years where you really just kind of questioning your life decisions and you're not seeing those returns. So I think what the management here is trying to do, exactly as you said up front, is smooth that journey for investors. I quite like the mix of gold and copper. Moving into the base metal sector, copper has lagged gold and silver clearly, but it does still have a very strong use case to it. In that regard, I think it's probably more of a resilient company, and I quite like what management is doing. But again, for the purists, if you're wanting the pure gold play, you're not going to be getting it anymore, and you're going to have to look for one of the other miners.
Yeah, of which we have the choice available there. So investors certainly have choice. Question coming through around Truworths, worth a buy at current levels. Devin, Truworths for you, is it worth looking at? Most folks seem to prefer a Pep or Mr. Price or even a Fashini, but Truworths for you?
Yeah, I mean, I think Truworths is in a difficult space at the moment, so I'm not one of the highest quality retail counters, and I think they're really trying to carve out their niche. If you're bottom picking shirts, it's something to potentially consider. Office, if I'm looking for bright spots, has done better, particularly online, that they're getting some traction there. But I look at their portfolio of brands and I just struggle to see really kind of sustained and robust demand coming from it, particularly with the the online competitors that are now well entrenched in our space. yeah, I think they're in for a tough old time. I think demand is muted at best at the moment, and yeah, not one I'm going to be jumping into.
Alex, I mean, this back in late last year, it was actually trading at highs. It's now, I mean, I've zoomed out to a 10-year chart. It is down over 10 years. Alex, for you, some Truworths or not so much?
To be honest, I've lost some conviction over the last year. I used to like it. But I think for it to really do well, you need some economic growth to pick up in South Africa.
Yeah.
Because they are more obviously using credit. So cash retail is not really where they were very strong. I think on the positive, they most likely with the capex coming to an end now, they can start doing some share buybacks again. However, I did get the sense that they are looking to do more deals in the UK. That's another risk for me. So even though Office has done well, I mean, people's got short memories. Office was a disaster when they bought it.
Yeah.
The UK economy is also difficult to get a sense of how that's going to perform in the next few years. So, and the SA part of Truworths has gone backwards an alarming rate over the last 10 years, even longer. It's difficult to see how they can get back to growth other than this high economic growth via debt. So, accounts receivable. So, I'm not too sure. It's cheap, perhaps cheap for a reason. You can also look at some of the broker forecasts. The ranges in earnings is very wide, telling you the forecast risk is high, and people are quite frankly unsure what the future holds for the business.
Yeah, it's actually a great point. I had a look at it a week or two ago, and the width of that forecast was, people just simply unsure. Alex, let's stay with you. Question coming through around Afrimat, worth having a look at. It seems like it might have found a bottom. Market like the trading update. Results, I think, next Thursday. Alex, your thoughts on Afrimat?
I said the results are going to be very important because you need to get an update on some of these issues. It's not going to be pretty. I think investors that are Afrimat need to know that it's probably going to be tough for the next 18 to perhaps even 50 months. But they are doing the right foundations. I mean, these guys are thinking long term. I think they sometimes are frustrated of the investors being so short term orientated. I mean, obviously, I still think they've got potential large value they can create it through the cement business. I think that they've really bought at a cheap valuation, and I think that a lot of value unlock can be there, but it takes time. And at the same time, we've got perhaps some problems with Nkomati with the anthracite that it's not going to be able to be used for the smelters anymore. So that's another knock-on effect. So that's a negative. We are seeing some better iron ore pricing in the moment, so that's a bit of a positive. So there are some positives. We like the story, call it medium term. We expect some more headwinds in the shorter term. And for those investors that are willing to look through the noise, it's probably a good time to buy. But patience is required here. Don't expect miracles over the next 6 to 12 months.
Yeah, it's going to take some time for Andrew van Heerden and his team to get Lafarge. And as you point out, other challenges as well. Devin, for you, some Afrimat, it is going to be tough. But I mean, if nothing, it's a management team which have the track record for it, I suppose.
Yeah, spot on, Simon. I think that was going to be my comments, is that they're in a tough old space at the moment. A lot of things not going their way, but potentially if you kind of look through the short-term pain and you see some of the other parts of the business doing well, they could really absorb those losses that are still coming out of the Lafarge acquisition. And with that successful track history, there's a chance to back this management team and be rewarded as a shareholder. You're not seeing it yet, but I think piece by piece with Alex said patient investing, I think that's bang on. You could be rewarded, but not without risk. When you are playing in this space, there's a lot of moving parts, and clearly you're seeing that in the share price at the moment.
Yeah, and to both of your points, this is not an overnight story by any stretch. Devin, staying with you, question came through. Please ask your panel of experts, how can I invest in renewable energy? I mean, there must be hundreds of ways. We could do copper, we could do solar plant, I mean, all sorts. But Devin, when you look at renewable energy, is it something that you've found an investable way into it?
Simon, no, not directly. We'd rather look at kind of bottom-up companies as opposed to thematic investing that can just go a little bit awry. And oftentimes they can be a little bit faddish if you have a basket ETF that kind of encapsulates those. They're usually good for a bit and then fade quite quickly. It's interesting, you've got kind of if you think of the bigger tech companies, Meta comes to mind. They've got a whole lot of investment into nuclear energy. that might tick a green energy box for some investors. But yeah, I think looking thematically, potentially be quite cautious there. But yeah, I like the copper play. It's a metal we're really bullish on, and that's kind of the green metal, so to speak, that it wires all of these things quite literally. So yeah, maybe kind of a picks and shovel approach in that regard.
Yeah, and a quick Google search shows me 20 ETFs, and I like your point. Sometimes they look really great, but none of these charts are looking particularly thrilling at this point in time, although there's some exceptions. Alex, for you, how do you have the thematic play into renewable energy?
To be honest, I've not looked into that. Personally, I've rather went for the uranium play than on an ETF basis, because I think the world requires a lot of baseload energy, and I think uranium is going to be a good big play there. So that's my personal preference, but there must be other options as well covering renewables. So if you have a deeper look, you should see many options.
Yeah. When you say uranium, the uranium ETF rather than a miner or one of those?
Yes, you can either buy a basket of shares, there's an ETF of that as well, I think it's called URA if I'm not mistaken, or you can buy the actual underlying ETF.
Yeah, URA and then URU is the actually, as you say, the metal itself. Alex, staying with you, great question coming through. After watching the show some time back, Alex Duys was liking Johnson & Johnson. I picked up some at below 150. I've now got more cash, but it's run really hard. Do we buy at this point? Do we try? Do we wait? Trading at all-time highs, dividend yield sub 3%. Alex, would Johnson & Johnson at current levels? Or the problem with waiting for a better price is it might never come.
Exactly. I think this is one you put in the bottom drawer, to be honest, especially as a South African investor. I mean, you're getting close to 3% dividend yield. So if they grow earnings at 4%, 5%, and keep the rating, you're making 7-8% a year in dollars, which will make you quite wealthy in rand terms over time. So I'm very comfortable with Johnson & Johnson. Obviously, pharmaceutical portfolio, predominantly in different type of cancers and so forth, that demand for that is surely going to grow over time, as well as the medical equipment. So it's one of those that you hold, and it does give you opportunity to pick up some stock and then you buy a bit more. There was, of course, into litigation against them, so that's one of the reasons why the stock was so cheap a while ago. I think that risk has decreased a little bit since then, so as a result the share price has improved a little bit.
Yeah, look, it's one I hold, and I take your point. I buy it and I just leave it, and it's giving me around about 11% a year in dollars over the longer term, which is more than enough. Devin, is Johnson & Johnson one that you've had a look on, have thoughts on?
Not particularly closely. I mean, but this is a bellwether company kind of in consumer healthcare, that type of thing, that really just has been incredible. It's had a nice little bump up, but I don't think that should scare away investors. If you like the portfolio of assets, they're investing a lot into their US manufacturing. They've always piled significant capital into research and development. So I like all of those. Healthcare will continue to be an important play as we see increasing consumer wallet go into that. One I like, that dividend yield in dollars is nothing to sneeze at.
Yeah, and in the US, 3% is a big number because typically dividend yields are lower. Let's stay with you, Devin. A question coming through. Bytes Technology had a bit of a tough time. I'm not sure how worried we should be about it, or is there opportunity? Is Bytes one that you would be looking at this point?
Simon, I was just having a look. I think results out later this week, if
I'm
not mistaken. I mean, this is a business that derives from kind of software sales, hardware sales, which is a really difficult business, and then servicing, which is becoming increasingly competitor, predominantly UK based. And I think, Alex mentioned when he was talking about Office earlier, how difficult the UK economy is at the moment for retailers, and software and technology providers is no different. They're struggling with kind of tepid growth. They also got political issues. So not compelling. Trying to look for a few positives here. I think balance sheet looks okay, but not one I'm rushing into.
Alex, I mean, it is a UK story. The trading update spooked the market a bit. Is Bytes worth having a look at?
Yeah, so certainly they need to get more clarification on the update they gave at the AGM, where they did spook the market and the share price sold off about 30%. But that was more temporary, I understood it. I don't think the structural growth levers have been affected on the business. So obviously Microsoft is a big vendor for them and obviously then resell this to other online clients. So if you believe that Microsoft will continue to gain traction in business, cloud and actual offers and so forth, then they will also benefit from that, as well as security. We know all the IT security is becoming quite a big problem. So that once again, the vendor and reselling of that to the underlying companies. So we think that's a structural growth theme probably in the UK. They are more geared to all SME type of operations. They also got quite a sizable public sector book, business called Phoenix. So we probably think they can grow, big annuity business. They can probably grow high single digits in pound sterling term over a number of years. And that's relatively attractive. However, I was going to plow it in the bottom line. I think that's a little bit concerned, and that's why the share price did sell off. But since then, it's recovered quite nicely. I noticed Coronation have picked up a lot of stock over the last few months. So we are cautiously optimistic about prospects. Not going to shoot the lights out, but I think it's a decent compounder for African investors that doesn't have money offshore.
Yeah, and it has taken back, about almost half of that collapse from the mid-year. Alex, staying with you, question coming through. After the Mondi update last week, Sappi also got sold off. We've seen a bit of a bounce. Any opportunity or best left alone? Alex, Sappi or Mondi, or perhaps neither?
I concur with that on Sappi. I think pretty much the first time in my career of almost 18 years I'm buying Sappi. So Sappi, I think for me, it seems like the worst is over from a balance sheet perspective. So they spend a lot of money, capex, upgrading plants there in North America. So they've got good quality plants. These plants are still needs to get to run rate capacity. So they're still burning cash a little bit, but capex is going to be reduced substantially. The banks have waived some of the covenants for a year, and we anticipate that deleveraging is going to happen from this base going forward. Now, Sappi's market cap is about 12 billion rand, and I think they got about $2 billion in debt. So they de-gear by $1 billion of debt, which I want to do over the next 3 years. And that's roughly call it 17 billion or so in market cap. So the stock could easily do, in our view, 150% if you believe the stock can de-gear. And we think that announcement on Friday with the banks was a big step into that. So it's obviously high risk and things can go wrong. We know there's some ex-growth components of the business, and it's not the highest quality out there, but it's massively geared if you can believe they can deleverage the business.
Yeah. Devin, when you go to stock picks, and when you were on last week, in fact, the other gentleman picked it, Sappi. Do you have anything to add to a Sappi or a Mondi?
No, not really. I mean, but investors must really watch both those balance sheets. I think Alex is spot on. Is the de-gearing, if they execute on that, that'll be terrific. I think the market's concerned about the potential of a rights issue down the line if they don't get that right. So yeah, and Mondi, just a horror show of a results update that is still giving it indigestion.
It absolutely is. Let's go to stock picks. Devin, you're sticking with your master drilling. In fact, they report in dollars. I just remember that. But basically, they make the mines, and they're largely agnostic as to whether you're a copper or a gold or whatever. They just make holes in the ground for you.
Yeah, that's right. We chatted about this, and you spoke to management recently. They're a fantastic little business. They run a range of raise bore drilling, regardless of the commodities. They're seeing particular demand in the green metals, copper that we spoke about earlier. And maybe something we didn't chat about last time is they hold the world record for the longest raise bore ever drilled, 1.4 kilometers. So they really got very high technical expertise. And what they investing a lot in now is actually autonomous AI raise bore rigs and rigs. And these are going to be safer. They're going to be more efficient. And they're hoping to have about 40 of those in an autonomous fleet by 2027. So yeah, one to watch and doing a lot of innovation in that space. Yeah,
and based out in Fishville and still there, down in sort of south of Joburg. Alex, for you, South 32.
Yes, so I think it's a geared play on aluminium price. Over the last 10 years, bulk of supply has come from China. And now China have reached the self-imposed capacity cap. So that means that, in our view, supply growth is going to be muted going forward, while demand prospects are still solid. And as a result, we think further tightening in the aluminium market is possible. And at the same time, South 32 is derated substantially relative to its history, its peers, and is trading on depressed multiples or earnings. They've also got investments in North America with Thailand, so that's going to be earnings enhancing at some stage in the future. So I think it actually gives a very compelling opportunity at the moment, especially relative to some of the other commodity shares which has done so well in the market.
Yeah, I was going to say, it's been a bit of a lagger, and if things start to turn, I mean, it's not a gold miner by any stretch, but certainly perhaps some opportunity there. That's all for Stockwatch today. Thanks to our guest, Alex Duys from Umthombo Wealth, going with South 32. Devin Shutte from the Robert Group, going with Master Drilling International. Up next, the close. Stay watching.
Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.